Hi everyone, welcome back to Berich podcast. So this session is going to be a discussion on the comments from Berich and MoneyPage YouTube videos. So the first question is, today is the beginning of the financial year 2024 to 25. What happens to the stock market?
Nothing. See, there's two portions to keep in mind here, right? It's just a financial year starting. So it's like beginning of a race. Coin toss is being put. Now, who's going to bat has not even been decided.
Okay.
At this point of time, you're asking me what will happen in this match. Will Dhoni win? I don't know. So the implications of this question doesn't matter. And what you should remember importantly is financial years don't have any impact on in terms of investment. You have to look at earnings. You have to look at business strategies. You have to see what is happening. Like, for example, when we're talking about TTK, why is TTK sales going down? We spoke off camera about Albin was also there, and you were saying everybody else is entering the same space. They had a monopoly there. They had a moat. That moat is slowly being chipped away on. Business is down somewhere else. Everyone wants to see where to expand, where to grow.
Okay.
You see some guy who's making
Appliances.
making money and been doing it for 100 years. Then like, okay, we can also do this. We have the money to invest. That's how Amazon's doing Amazon Basic. Amazon Basic, they'll make products, whatever product is selling very nicely. They'll just buy it from China, from their factory, put Amazon Basic and sell it at half the price.
They're making laptops, batteries.
Everything. They make anything and everything under the sun. They soon start making cameras also at half the price of...
Just because Amazon brand name is there, people will buy them.
Correct. And Amazon return policy, Amazon warranty. He'll say, okay, you return, don't like it, return, take a new one. He doesn't care. And you can't compete against that. So it's very hard. What you should focus on is the business, what is happening in their industry, what is happening around him, who's compete against him. Those are the things you should look at in terms of investing. Looking at a financial year means, you know, what's happening to you is you're so bored and you're waiting to do something. So you're making something out of nothing. Okay, like my father will say, MAFA, which is mistaking activity for action. Just because you're doing something doesn't mean you're acting. You're creating action. So don't waste time about financial years unless you're an accountant, unless you are doing accounts or you're running a business, then yes, it's a separate thing. If you're talking purely on an investment level, which is what we're talking about, don't waste time worrying about financial years starting and all that. Focus on what is the company which are there, what is the earnings they're doing, what is the future prospect of this company for the next 5 years, what do you think, what will happen in the next 10 years. Analyze like that and invest based on that, and don't waste time about financial years. This is my advice, because it's a very blank question what he's asked.
So only the result will impact the market and not the beginning of the financial year. So
and even the results are all already done. Quarterly results are over. And if you see, all market pricing always is on future earnings. So if you look at it in that way, this really doesn't have any use. Next question.
What are your thoughts on Ashwath Damodaran? He's been called as Dean of Valuation.
Yes, he's got a nice book. That book is called Little Book of Valuations. How to evaluate a company. And it's a very nice book. It's a very small book, very dense with lots of information. And people who like, a lot of you keep asking me for numbers and equations and calculations. That book has a lot of equations, numbers and calculations which you can use to evaluate a company based on its balance sheet, based on number crunching. It is one method of evaluating. Let me say this. It is a very technical way in the sense of numbers and looking at earnings and all that and evaluating. But there is also another school of evaluation, which is looking at the broader picture, seeing trends, seeing where it's going. But I do agree on this, that you need to read this book and analyze it with mathematics and equations when you're starting. Once you start doing that many, many times, then you do not need to know 1 + 1 is 2. 2 + 2 is 4. Because what happens is you tend to be able to see a pattern. When you don't know a language, it's very hard. That's why you study grammar in a language. But once you start using the language, you're able to read the language and speak the language. You don't have to worry so much about knowing the rules, because what happens is it becomes innate in you. You start understanding words, you start understanding vocabulary like that. Same way you can look at a company's balance sheet without doing the calculations like how Anand does and say, okay, this numbers
just
look
like
right.
Driving, we tend to be better than valuations.
Correct. The more you do it, the stronger you become, the more fluent you'll become in evaluating a company. Then you will not need Damodaran's book. You will not need those equation studies because you become a master at it. But if you don't know the basics, you'll be making fundamental mistakes. So if you are starting investing, this is something very new to you and you know nothing about it, valuations especially, I would say Damodaran's book is very nice and I would strongly recommend that you read it. I have read it. Anand's recommended it. It's a small book and it's a lovely book and I strongly recommend that you read it. He's got other books also and I think you can see.
He has given many speeches.
Yeah. He's a professor.
It will be short also. It will be more than 50 minutes. 1 hour also it will be there.
Yeah. So if you're interested in it. So he's a professor of finance and he's very, very smart man. Extremely smart. And I highly recommend him. A lot of big market investors and market players have recommended his books, have said he's an excellent mind to study and his methodology is very good. He's got his own lots of website. He has a blog. Then Stern University online resources are there and you can go and check it out. And it's one of those things you can do as a friend or, as a family also. You, your brother and your sister are interested in investing. You guys can read the book together and discuss the book. Because as you read the books, lots of ideas will come. You'll come have a lot of questions. So you can discuss and learn. And it's a wonderful way to learn. So I do highly recommend that book.
Okay. So this session has helped whoever the person has asked the question. So please post in the comments. We'll answer in the upcoming videos. So thank you for watching the video. If you like this video, please like and share with your friends and subscribe to this channel. See you soon.
Thank you.